Hello and welcome back to All Things Money. My name is David Blain, and on today's show we're talking about oil and its implications for you, both as a consumer as well as an investor, starting to help demystify the oil complex. People think oil is this homogeneous thing. There's actually hundreds of different types of oil and different prices and different rates of consumption and production throughout the world. And so we're here to give you some information on oil as we look at what's going on in the Middle East with, of course, the Egyptian fall of the Egyptian president and the other protests going on, and especially today as we record this in Libya. So if you have any questions or comments on the show, please feel free to give us a call. Our phone number is 633-0107. Our email is allthingsmoney@dlblain.com. And you can visit us on the web at www.dlblain.com. So in the first segment, we talked a little bit about peak oil and how I think peak oil is an overblown concept. World oil production is still growing, but its rate of ascent has been moderating. And it's my belief that in the free market, as the price of oil gets so high, that the demand will start to fall off, and some alternative fuels such as solar or electric or whatever the technology is will become more economically viable, and so the demand for oil will fall off. And so I'm not a big believer in the fact that we're going to run out of oil. I believe that human beings will innovate long before that happens, and the market will make the price of oil so high that people won't want to spend it. So then we moved on to the top world petroleum producers. The United States actually is the third largest petroleum producer in the world, and their production has been increasing. In 2008 to 2009, it went up 6.5%. So now let's talk about the consumption side. As one of the largest oil producers, we're also one of the largest consumers in the world here in the United States. But what's interesting, if you look at the consumption, the U.S. consumed in 2009 about 18.7 million barrels per day. This is from the Energy Information Administration. China at number 2 at 8.2 million barrels per day. Japan number 3. Russia, and then Germany number 5 at 2.4 million barrels per day. So the U.S. is definitely the largest consumer of oil in the world. It's interesting to note that China at number 2 consumer in the world is not among the top 5 producers in the world. More importantly, let's take a look at the growth or reduction in consumption. And this is where the United States, I think, we don't get enough credit for this. That in 2009, the U.S. reduced its consumption by 4.2%, where China increased its consumption by 4.7%. Other developing countries, Japan reduced its consumption by over 8%, and Germany by over 5%. So the developing countries are definitely reducing their oil consumption, while the emerging economies of China, places like China, India, Brazil, are just now beginning to ramp up their consumption. When we look at the consumption of U.S. petroleum consumption, as of 12/31/2010, the U.S. consumed 19.1 million barrels per day, produced 9.6, and they imported approximately 9.5 million barrels per day. So we still have a big reliance on imported oil. Of course, Libya, a lot of the talk right now about Libya only produces about 3% of the world's oil. In fact, the United States, as I understand, receives no oil whatsoever from Libya. So that's not necessarily a concern for consumers in the United States. Europe does get oil from Libya. Italy is I shouldn't say very, but Italy is more intertwined with Libya than other countries in Europe, their economy and some of their companies that work in Libya. But all in all, the biggest concern with Libya, I think, is that people are afraid that the crisis that is happening in Libya will spread to other Mideastern countries such as Iran and Saudi Arabia. As we showed, Iran is number 4, and Saudi Arabia is number 1 on the world's top oil-producing countries in the world. Now, during the rest of this segment and the next segment, we're going to talk a little bit about crude oil confusion. Now, some of this research I was doing for today's show has been affected, the past week or so by the crisis in the Middle East, but the concepts still stay the same. And what I want to talk about is crude oil and its implication, number 1, for stock prices, and number 2, we'll talk about the different types of oil around the world. And when you hear oil at $100 a barrel, what exactly does that mean? So first of all, let's talk about, for investing in energy companies, what exactly does the price of oil mean? And one thing that we've seen recently is the price of oil in the U.S. has actually been declining, where the rest of the oil world has been reading headlines such that oil has been going up. And there's a disconnect between what happens in the rest of the world and the U.S., especially now between West Texas Intermediate crude, which is the U.S. oil benchmark, and say Brent crude, which is the North Oil Sea or OPEC crude. There are different types of oil around the world, and they're priced differently. There's not one homogeneous price. And so we're going to talk a little bit about those different pricing mechanisms and the spread between those different prices, as well as what does the overall price of oil have to do with energy investors. So we're going to take a short break here. We get a message from our sponsors of the show, and when we come back, we'll continue with our discussion about oil. For All Things Money, I'm David Blain.